Good afternoon, everybody. What's up? I'm an associate member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRA. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. Position disclosure here. I am not short TQQQ anymore, and in fact, I am long TQQQ. I'm also long UPRO, and I'm long AVGO. I'm keeping all those as newer positions. To the long side overnight, everything else is roughly the same. I had an SMH short on, I think, Thursday of last week. I'm out of that into the down move as well. So nothing too big or too crazy here, but trying to make a couple bucks. All right, so let's talk about today. SPYs here finished down 0.14%, so it was a very small red day for the S&P. The RSP was actually green. The Qs were down a bit more, though. The Qs are down 0.5%, and the IWM is continuing just to price correct some of that upside extension from the really big move that it had. It's down 0.7%. It's now back into the ADMA on the daily. So you really don't want to see the Russell bleed out too much worse than the pullback from Friday through today, or we might begin to have a problem. Overall, it was a very, very slow day today. We had a technical common gap to the upside. Common gaps tend to get filled. This one did get filled, and it actually really overshot that. From that point, it turned into a really boring trading session. So pretty much all of the action today happened in the first hour or so. Gap up and fade, overshoot, kind of a retest of Friday's low. I'm just seeing right now it's actually an inside day for the SPYs, which makes sense. It was so boring of a trading session. Then we had a little bit of a snapback from that kind of intraday oversold condition into yesterday's low, and then did nothing for the rest of the day. As far as the game plan for this morning, the big picture on the technicals is still bullish. We can look at that again in a second. It's bullish for the SPYs, it's bullish for the IWM. I would argue it's actually a bit more neutral for the Qs, and we'll look at that and talk about why in a second. But the big picture is fine and bullish, but we actually had a pretty big gap up this morning, and as we know, gaps can create a moderate degree of extension, which is pretty much what happened this morning. So the gap up created a moderate degree of upside extension on the small time frame. So the initial game plan is, even though the big picture is still pretty bullish, and I think the technicals are telling us still that you're better off being long than short here into the end of the year, you could look for a cute short kind of off the open, which is what we were discussing this morning. And whenever you're looking for that kind of cuter short to fade a gap, you're looking for a signal to put that trade on. And that signal, from my experience, usually occurs in one of two ways. Either they immediately begin selling it the second the market opens, which is what happened today, in which case you need to be able to recognize that kind of quickly, that they're selling it down right away, and you can try to get good pricing for just a short versus the high. Or sometimes what you see, if the gap puts people off sides, is you see a little bit of a continuation in the direction of the gap initially that can last for 15 minutes or so, sometimes as long as 30. And then when that happens, you're actually getting, depending on the rate of acceleration higher, you're potentially even getting more extended to the upside in the small time frame, or because we're moving higher, but the ADMA and 21 EMA are also moving higher, you're maintaining that degree of extension that came from the gap. You're not getting more extended unless you're shooting directly up. But you're not getting less extended either because the market's still moving higher. And in that case, then I'm usually looking for that like shooting star candle to come in for the cute short. So the way it played out this morning is pretty much right off the open. You had to be prepared for it. You had to see that we were selling down short early. And then, all right, where can we pull back to? And if I put that trade on, I didn't, but if I did, all I would have been looking for would be a price time correction to the ADMA on the 5-minute. And in fact, once we got that price time correction to the ADMA on the 5-minute, that's actually when I began to look long. So I started looking long. I think I bought a little bit UPRO, probably a little bit too early. And we honestly, the degree of this pullback here over the course of the first hour of the trading session really overshot my expectations. All I'm looking for is a pullback off the gap up to satisfy the extension. I was not looking for or expecting the market to really fully fill the gap, or let alone go negative. I know Brant called that out really early. He thought we were going to shoot negative, and I kind of thought it was a little bit of a wild call. I thought we were a little bit too strong, but it is what happened. We didn't just stop at the moving average area. We didn't find support at the gap fill. We actually traded straight down for the first hour of the day until we found some support into Friday's low. And then we finally had our first little bounce there, and then we pretty much did nothing for the rest of the day. It was a really quiet day. So turning over to the technicals and the daily chart here, they're not broken. The SPY daily chart is still pretty full-on bullish at this point. But if you're trying to be a bull on the market, you probably want to see a little bit more constructive price action today than you were able to get. Again, we're not by any means broken down on this consolidation. It is still a bullish consolidation to all-time highs for the SPYs. But the fact that Friday just wasn't like a one-day anomaly, and then we didn't just gap up and hold the gap higher, and kind of holding stronger today, might be a little bit concerning if you're trying to be a bull. But at the end of the day, it's an inside day, and the bullish consolidation is still intact. We pulled back into the 21 EMA for the second day in a row. So the technicals here, in my opinion, are still bullish in the SPYs, but we are applying some pressure into some support, and if we lose that support, we can get back to being a little bit more neutral. The IWM is full-on bullish, right? This is the one that's actually been leading recently. On Wednesday, I think it was, of last week, we were looking at this bull flag breakout for continuation. We got it. Market began to extend. Friday was technically like a little RDR on a day 3. I didn't like that trade. I actually thought we were going to extend further, so I didn't put that trade onto the short side. I wanted to be a little bit more patient, try to wait for one more bigger up day. We didn't get it. We price corrected off the extension on Friday, which is fine. When it comes to the counter trend trades, I say it all the time, and this is a perfect example of it. I would rather miss the trade entirely than be too early, and that's pretty much what happened here. I was starting to eye an extension short in the IWM, but I missed the trade because I didn't want to be too early. I really thought that we could have had one more really strong day, one more kind of big day 3, and then the short trade would have potentially worked out better. And whatever. So just didn't quite capture it. We price corrected Friday. We gapped, not even all the way to the 80 EMA on the daily though. We gapped up this morning, price corrected now to the 80 EMA on the daily. So like I was saying in the beginning when I was just kind of reviewing how much the market was up or down, the Russell having a 2-day pullback into the 80 EMA on the daily chart, not the end of the world. This is still a really bullish, strong-looking chart overall. But if you are a bull on the Russell, you do want to see this pivot low come in relatively soon. I would not want to see the IWM lose 250, which is kind of the midpoint between the 8 and 21 EMA. It's also a previous support level from the bull flag. If the IWM loses 250, you might have the beginnings of a problem. But for the moment, this chart is still pretty healthy and intact, and you can look to be long. The one that is, and real quick before I look at the cues, the RSP real quick, by the way, is also super bullish. So SPYs still within their bullish consolidation. IWM still bullish, but giving a technical pullback. RSP looks great. The one that's a little bit more of a concern is definitely the NASDAQ. This is the only index that I really look at, because I don't really look at the Dow, but at a quick glance here at the Dow is also bullish. The NASDAQ's the only one that I'd be moderately concerned about. It wasn't as strong in this snapback rally in the end of November and beginning of December as the other exchanges were, the other indexes were. But the pullback has also been more vicious, and we know what that's coming from, right? It's coming from Oracle earnings, it's coming from AVGO earnings, 2 days in a row at the end of last week, hitting this index down and creating maybe some concerns around the AI trade. And it certainly looks like when you look at AVGO, like the AI trade is getting like pretty fully priced into the market, because I still think that the AVGO earnings were excellent overall, and you're really like pulling hairs to try to say, oh, but the fiscal year revenue guidance wasn't as much of a beat as people would have wanted, so therefore the stock just got absolutely torched 2 trading sessions in a row. It's really that, it seems like this AI trade is getting very fully priced into the market, and a really good earnings report is just simply not good enough, and that is what's creating this weakness in the Qs. And I keep saying it over and over again, I am bullish into the end of the year, strong seasonality effects into the end of the year and through at least the first half of January, if not the entirety of January. is kind of keeping me a little bit more on the bull side and looking to buy the dips. But I still think that there are really two things that have the potential to really derail this market. The first and foremost is the AI trade falling out of bed. AI represents pretty much 100% of the economy. If it wasn't for AI capex spend, the U.S. economy would most likely be in a recession. It would be growing at 0%. And the AI trade is 85% of the stock market. So if you lose the AI trade, this is an if-then statement, if you lose the AI trade, then you potentially have a bigger problem with the market, especially when you think about market caps. And that's what started to impact these Qs here the last couple of days and just make this a much more neutral looking chart. Not a bearish chart, but certainly not as bullish as the RSP or the IWM or even the SPYs for that matter. And it's just a little bit concerning. We have to keep an eye on that. You want to see these Qs get back above 620, and then they'll begin to look healthy again. And while you're watching that, you need to make sure every day that you're watching these really important AI stocks, because like I just said, this is the stock market, and Oracle looks like crap, and AVGO, I'm actually swinging it long overnight. It's not a very big position. I closed down really small on the position P&L wise at the end of the day, but now it's two huge down days in a row into a much larger support. This like entire 330 to 340 zone for AVGO is a really big area. So I'm gonna watch this AVGO into this support zone. I'm keeping just a little bit overnight just as a trade, but this is what we gotta watch, because at some point this AVGO is gonna have to bounce back or consolidate. If it bounces back and makes a lower high, or it consolidates and then breaks down further like bear flag continuation, and you really begin to lose this 330 support zone for AVGO, then you're starting to show that AI is becoming an issue actually for the market. After really being the thing that holds it up for the entire 2025, it's becoming an issue. And again, with the market caps, when you think about like the Mag 9 or whatever, like 3 of them at this point are semiconductor stocks, then you got a potential problem. And Oracle is the big canary in the coal mine as well. That chart looks terrible. NVIDIA does not look good. We actually called out in the morning meeting today to look for a NVIDIA short versus 180. Another one, this 180 level has been a little bit sloppy, and we've gotten below that 180 here in November a couple times. We've been closed below it a couple times, but this feels more real. I don't know if that's the right word on just where this is closing down here and consolidating down here. Like it might really lose this for continuation. So NVIDIA is not looking great. I don't think AMD looks very good right now. I don't think that Marvell looks very good right now. ARM looks terrible. ARM got downgraded this morning. This thing does not look good. Micron's still a little bit better and still kind of intact, but a lot of these AI charts, when I'm scrolling through them, they don't look good. It's reflected in the Qs. And while I'm trying to maintain a bullish expression on this market, just again the seasonality effects of December and January and the bullishness of a lot of stuff that we're talking about, you really got to be cognizant of the fact that the Qs have become relatively weak, and it's the AI trade that is creating that weakness. So for me, I'm trying to be a little bit lighter on my feet, hit some singles and doubles, and kind of take it from there. So that's pretty much all that I've got. I do have a party to get to, so I don't have a ton of time, but I've got a little bit, so I'm happy to answer any questions anybody may have. From John, Hershey's Pepsi daily charts look good? Question mark. Let's take a look. I don't really ever look at the consumer staple stocks individually too often, to be totally honest, because I find them to be pretty boring, and they're usually kind of range bound. And if you scroll out in this Hershey's, it certainly is range bound. But if you look at the smaller time frame, more recently, you have to like today's candle on this Hershey's. Good confirming volume, nice little breakup. I don't know what caused that. I don't know if that was earnings or probably not earnings, but some sort of news. But yeah, Hershey's actually looks pretty good. Pepsi, same deal. It's like these very range-bound consumer staples have just never been in love with trading them, because it seems like they're always within a bigger picture range, which makes sense when you think about what type of stock it is. But I mean, yeah, if this thing can hold above 150, it's an improving chart. Yeah. So. And part of the consideration here, I think, on your question, John, because it's what your comment's alluding to, is just this idea of rotation, right? Like, so much of the market now has become about dispersion and rotation, and if you are seeing money come out of, you know, the Nasdaq and the AI trade a little bit, like where is that money going? What sectors is that running into? And you know, you can look at consumer staples for relative strength. You could probably look maybe at healthcare for relative strength. But my biggest thing is I want things that can move, right? Because that's where I can make money, when things move. And some of these healthcare stocks actually can move okay, and they're pretty tradable. But for me, instead of looking at a Hershey's or a Pepsi on the long side, I would prefer to actually look at, you know, if I think that money's going to be rotating out of the Nvidias of the world, I would rather be looking at Nvidia short, because I know that Nvidia is a stock that trades well and can really move. So, you know, we can trade both sides of the market. I would say instead of trying to be long, you know, consumer staple, because that's where the money is going to get rotated into, but just such a boring area of the market, I would rather be short, you know, something that can move, if I think that that's going to be where the money rotates out of, if that makes sense. What else, guys? Anything else? No real commentary on the YouTube. Priceline. Why did I think that this was not a stock anymore? It's not. It's PCL. What are you making me look up? Oh. PCLN is actually a chart here. I need to get it off my screen immediately. Booking BKNG. This is actually looking pretty nice. I don't like to trade this stock. I don't like these expensive names with the wide spreads, but this looks great above this like 5,300 area. One of my favorite names to be long into year end for a potential rally. Well, I have been looking at these meme stocks, honestly. I thought that they might rally a little bit into the end of the year, but they traded terribly today. Like RGTI fell out of bed on its pattern. I still have a little bit long, but I'm going to keep a tight leash on that. QBTS fell out of bed on its pattern. I didn't get back in QS short because I wanted to wait for the end of the year because I thought that they might rally that thing a little bit. And now I'm looking at it, I'm like, damn, I missed my trade. So that's kind of what I had been thinking. But you know, generally, I would say the things that are already up, John, are the things that you should be looking at to be able to get continuation. And I would avoid, for now, still, even if you like TTD as a company, I would still avoid that stuff.
I know, and I think
from Kevin here, I used to swing trade options and size my positions for max loss on defined risk, spreads, and individual options. How should I size swing trades into equity to protect myself from gaps? I like to use relatively tight stops. So, look, gaps are always a danger, right? Gaps are a danger on any swing trades that you have on, and you never know when news will come out. I'm a big believer that it's a great strategy for traders to have their swing trades start as day trades and then only keep it overnight if you have a strong profit cushion already. So then when you have a strong profit cushion already, you're in a win-win situation. I love the idea, the concept in trading of just consistently trying to put yourself in win-win situations. And then once you find that you're in that win-win situation, doing whatever you can to maximize reward. So, you know, if you've got a strong day trade on, that day trade closes really well in your favor, that's what I want to swing, because then let's say the whole market gap's down a percentage point tomorrow and you were 2.5% in the money and you swung it, it's not a big deal. You're just giving open P&L back. So if you're asking me what the best way to protect myself is from gaps, if you want to be swing trading equities, it's to make sure that you have a strong profit cushion in the trade before you choose to keep it overnight, and not to be swinging things that are that are already against you basically at that point. So I hope that helps. Tesla? I mean, Tesla's a long. So Tesla's a long. You know, I have some short on just because I'm a stickler for a game plan and I want to stick with that, you know, for other reasons. But I've been calling Tesla out as a long. I called it out on Friday as a long. I called it out today as a long. Tesla's a long. So you should be long the stock. From Cyril, do you see possibility of range-bound market if there's no catalyst? Yeah, definitely. Or my more main thought process was like a grind up situation versus like acceleration of the upside. So So, you know, we hope that that works out that way. So I hope that helps as a quick answer there, Cyril. All right, guys, I'm going to wrap it up there. It's a lot of noise and hecticness going on around me. So I'm going to wrap it up there. We're doing a little holiday party over here at T3 tonight. So I hope everybody has a fantastic night. And I hope Pat makes it to the office on time tomorrow. Have a great night, everybody. See you then.